Hello, hello.
Case, about 37% of it, we're going to front load to the very first year. So on a $1.5 million property, we're going to be able to get you about $375,000 write-off. If you're in a 38% tax bracket, which you are at almost $400,000 there, you would then be avoiding, about $180,000 in taxes. You take that money, you go buy another one next year, and you do it again and again and again and again. So the biggest thing we hear, and I always joke, it's always from an old CPA. An older guy will go, "What about recapture? Like, I don't want my clients. This is the way we've been doing it forever. I don't want my client having to face an issue of recapture. I just want him to leave the depreciation the way it is. I mean, eventually he does get the depreciation. All you're doing is spending a couple $1,000s to front load it because you got to pay us to front load it, so it's expensive. And I don't want my client having to pay you, $4,000 just so he can write off $400,000." Which to me sounds crazy. In fact, Dallin, if you guys know Dallin, has a great story about how he's sitting in front of a CPA, his previous CPA, and he and his business partner starting to make a little bit more money, and they're getting a little upset about the amount of income tax or about a federal, income tax they're paying and stuff. And the CPA says, "Well, I mean, paying taxes, that's just a part of becoming rich." And they just go, "All right, we got to fire this guy." And so the thing is, recapture exists. It is a thing. The only way to avoid the depreciation that you're getting is to literally die and never sell the property. So if you do sell it, you will have to pay recapture. But here's the thing. It doesn't matter. Like, it's still a good thing. And here's an example I'm going to use. So this is the building we just did, that $1.5 million building. All right, so let's say originally you're like, "I'm never going to sell this thing. I just want to get a big write-off. I'm going to keep it. I'm going to continue to make money on rent." But let's say 3 years later, you get a heck of a deal. Some guy comes along and is like, "I'll give you $3 million for this property." And you're like, "All right, I got to sell this thing." So you sell your apartment. If you never did a cost egg, the amount of depreciation in this case for about 3 years would have been $98,000. Okay. The government says you got to pay back 25% of that. Mind you, at a capital gains rate, it's only about 15, 20%, but you got to pay it back. So 25% of 98,000 is about 25 grand, right? So that leaves you with about $73,000 that you were able to take advantage of depreciation. Okay. So that means over the course of 3 years, every year you did, at the end of that, even after paying everything off, you were able to get take advantage of about $73,000 of tax write-offs. If you cost segged it, you would have written off over the course of 3 years $426,000. That's the 370 something that you had gotten the bonus year. But every year there's still more you're writing off. We still left about 60, 70% of the depreciation still on the bone there. So the next year you still got to write off some, about 20,000 each year. So by the end of 3 years, you wrote off about 426, and you got to pay back, or you got to, they're going to want 25% of that. And at first you go, 25% of 400,000. I mean, that's like 100,000. That's way more than the 25,000 I was talking about earlier. But again, it's at a capital gains rate, so 100 grand is about 20 grand. Who cares? But you did get to take advantage of the other 75% of that depreciation. So that means you got to still write off $318,000 of tax liability over the course of the 3 years. That's a lot more than the $73,000. So even though you did have recapture, you did avoid, $150,000 in taxes over the course of 3 years. And what you did with that $150,000, well, let's hope you bought more property, because the benefit then is that new property you bought, we're going to cost seg, and then you're not even going to have to pay back the depreciation you just did, because we'll count out that income as well. And the future value of money. I mean, it's one of the first things you do in business school. You know, they always do that thing of like, if you win the Powerball, do you take all the money up front, or do you take half the money up front, or do you take the 100% over 30 years? And you always take half up front, because 50% of the money today is worth more than the 100% of the money over the course of 3 years, because of your ability to invest it and buy commercial real estate. So it's better to have avoided taxes on the $426,000 and use that money to buy more property and become richer, and then get more cost segs done. Any questions at this point? Anybody kind of like confused?
Yeah. Does that all apply to new build, or is that just purchase?
That's anything. New build, purchase, anything.
Cool.
The only thing is, for the bonus aspect, it has to be purchased or built after September 2017. That's when that tax law for the big 100% bonus came into play. But there is something cool that, like, let's say it's a building from 2015, and you call me up and you go, hey, I bought this building in 2015. I'm kind of worried about the pandemic right now. I'm kind of worried where the market's going to go. I did make a lot of money in 2019. I filed an extension. Let's cost seg my building from 2015. And that way I can get liquid, have some extra cash. And if there is a market correction, I'll be liquid and I can buy more property, you know, because that's when the market does correct 10%. Some of those deals that you're having a hard time penciling, we'll start penciling, which you'll have more money, right? Yeah. So if you came to me with a 2015 property that you built in 2015, what the IRS wants you to do is play catch up. So they want to pretend like you did do it in 2015. You're just taking advantage of it in the 2019 tax year. So what happens is we'll do a traditional cost seg, where we kind of front load the first 5 years. But in this case, you're taking the first 5 years in the first year. So you do pretty much get a bonus depreciation. It ends up looking just like a bonus if you come to me with a property from 2015.
Right. No, my partner's about to build a multifamily and commercial in Mesa as a first build. So I'll have to introduce you.
Oh yeah, I mean, I would hope if this. Oh, is this his first ever, or has he done this?
No, first ever.
Oh, first ever. Oh, okay, great. Yeah, then you have to introduce us, because we need to. Yeah, he's gonna want to start cost segging every property, because then it allows him to build the next one faster and go from there.
Yeah.
I was gonna say, because I was asking who was first, because like if he's been building a lot, I'm like, he's probably already been cost segging, but nonetheless, I'd still love to talk.
First one.
Perfect. Well, congrats for him.
Yeah.
So our company, what sets us apart, RCG Valuation, we are the only company in the U.S. doing digital scans. Okay, so the way this has kind of been done since the 1940s is an engineer would come out to your property, they'd walk around with a notepad, and they'd write down, hey, X amount of crown molding, X square footage of tile cost at this price, this many washer dryers at this price, this many shades over windows, etc. And they write it all kind of down. And then they fly back to New York or San Diego, and they kind of put their study together. The problem is, if they sit down at their desk in San Diego and they go, oh man, how many mirrors were in the second floor of that apartment complex? It's like they either got to fly back out and count them again, or they just guess. With us, we are going to send a drone over top of the building externally, and then we are going to walk through the inside with an infrared digital camera, and then we are going to be able to create a geocoded, time-stamped layout of your property. So the benefit of that is, if you are ever audited, and I remind people, this isn't a red flag audit situation. A lot of people call me up and go, dude, like, for this guy, one of our clients, he's about to avoid $4 million in tax liability. I mean, he's like, oh God, am I going to get audited? It's like, not because of the cost seg. I mean, maybe because you make $4 million, you're in such a high tax bracket that you're more likely to be scrutinized, but it's not because of a cost seg. Cost seg is not going to red flag you. We literally, of all of our clients, and we've got thousands, we've only had to deal with one audit. So we're 100% on defense, but we provide audit defense for all of our clients for 7 years, for that 7-year window. And the benefit is any other company is going to say, hey, here's a 60-page layout of documents and an Excel spreadsheet of all of our stuff categorized, maybe a few pictures. With us, we have that too, but then we also go, oh, and here's the building we scanned in 2018, exactly how it is. So when we do, like when the IRS goes, well, you wrote off this much for landscaping, and the building, you know, they want to say the building only has 5 trees and you wrote off 8 trees. The benefit is we go, well, yeah, because in 2018 they had 8 trees. They just had a microburst go through the area and knock 3 trees down. They never replaced them. So here's our proof that we did that. The other big benefit for going for a company like us is experience. If you are audited, the first question of the 14-step questionnaire for the IRS agent is going to be, what's the construction experience of the engineer who put together this, you know, cost seg study? And if it was just your CPA guessing and putting some numbers down, it ain't going to look good. I had literally a client this week tell me that he's done 3 cost segs, all with just his CPA, and they just kind of write some numbers down and they call it a day. I was like, that. He's like, can I do that? I'm like, you can do whatever you want. If the IRS agent calls you up and asks you how you came to those numbers, you guys might be in trouble. But with us, we also provide about every client of ours has about 15,000 files of data stored on each property. And we put together a smart report. The last IRS agent we had to deal with, the one and only, loved our report. He even joked. He's like, most of these companies hand you an 80-page layout of like definitions. Like, here's the case court precedent from 1985 that says why we can use, you know, cabinets and write off a cabinet or whatever. We have that, but we don't just fill the thing with meat. We give about a 13-page report with clickable links all the way through in a smart PDF form, so they can kind of click on each link. If he's seen that case study a million times, he doesn't actually want to have to comb through it. So with ours, he doesn't have to actually comb through it. He can click on it if he wants to see it, but he knows it. So we can give him a streamlined 13-page report that makes their job super easy, and they literally just looked at it and went, all right, we're good. The other benefit of our company is we're fast. So most companies take about 60 to 90 days for their engineers to, you know, go through the property, then sit down and put the whole thing together. We do ours in 30 days or less from the scan. So a great example is we had a client who was in St. Louis. They had a 9-acre property with 3 or 4 buildings, about 150,000 square feet in buildings. And the other company we were competing against said they wanted 7 or 8 days to walk the property and get all their notes. We were able to do it in 12 hours and scan the whole thing and then be out of their way and then put our study together. And that's obviously why we won that job. Here's my email. If you guys want to screenshot that, that's my email. It's also my cell. I as a former reporter, I love when people reach out via cell. I have handed this thing out to, I mean, multiple accused murderers, you name it. So like, I'm never worried about how many people have my cell phone. Feel free to give me a shout whenever you want. And literally text me anytime at night. I'm kind of, the number of times I had clients that are like, Joe, I was looking at this property on a Saturday. I wanted to get your take on what the potential cost seg could have been on this. I'm always like, dude, just call me on a Saturday or text me. You know, I have no problem giving a quick response, because we do free estimates. That's one of it doesn't take me that long to kind of put an estimate together. So if you're like, sometimes people are looking at a deal and they're like, man, I kind of want to pull the trigger on this, but I'm not quite sure. I have a lot of commercial real estate brokers that'll send me clients because, you know, they're trying to convince a client to pull the trigger on like a $2 million building. And they're like, hey, I'm not really sure I should do this. And they go, what if I could introduce you to a guy who can shelter about $700,000 in tax liability? They're like, well, then I would buy it. And they go, great. Let me introduce you to Tyler. And people always ask, you know, what's the biggest, what's the smallest we've done? I mean, we've done some giant properties. We've done the largest marijuana facility in the United States of America. We've done multiple multifamilies that are in, like, you know, the 20, 30, $40 million range. We've done a lot of the big price stuff. But we've also done some small ones. The cheapest I've ever been involved with was a $150,000 property that they wanted to get a cost seg done on. And I'm about to break that because I had a client I'm filling out an estimate for right now. They've got about 13 or 14 properties. I can't remember, about a dozen properties. They're lined up anywhere from like 20,000 purchase price to, like $150,000 purchase price. And so I'm trying to put together which ones we should do and what we shouldn't. Obviously, when you get down to a level of like 40,000, my idea is you don't do it. The theory being you're going to have to pay us like $1,000, $2,000 to go out and scan this property. And on a $40,000 building that they bought, in the downturn of the economy in 2009, right? The IRS looks at the purchase price. They don't care what it's worth now. They want the purchase price, what you purchased for it. So we have to look at 40,000, and what we're going to be able to front load on a residential property at $40,000 is going to be probably about 10 grand. And if that's attacking capital gains, they're only paying 20% on that. So of 10 grand, they're only going to get about really a $2,000, credit back on their taxes, and you're going to have to pay me $2,000 to show up. So I would recommend obviously not doing that cheap, but he's going to want to do some of these $50,000 and $60,000 properties he's got. So he's just trying to get as much liquid as he can right now, just so he can start buying some more property. So we've done some small ones, but typically in residential, I always tell people, because we had a lot of people are like, hey, I've got 3 residentials. Should I cost seg them? Typically the answer is no. And that's because on a residential property, let's say you're making $500 a month on rent for that residential property. You're making about $6,000 a year of profit. The normal depreciation cycle is gonna wipe out about $6,000. So it doesn't make sense. Now, if you're a real estate professional and you're making, an active income as well of about, say, like $100,000 a year, if you're somehow involved in like property management or whatever, and you're making like $100,000 a year, and then you have some residentials, now maybe it makes sense. Now you cost seg 3, $150,000 properties, which equal about $450. So we'd be able to write off about, if we got really, it depends on the property, but anywhere from like $150,000 to $200,000. But if we're able to write off about $200,000 for you, now you're not paying taxes for like 2 years. So now that kind of helps, or at least that first year completely paying no taxes. And so then you take that, $30,000 or $40,000 that you avoided in taxes, and you go buy another building next year. So it can help people get liquid and then bring in more money and help grow their portfolio. And like I said, the money today is always worth more than the money later. I always think it's so strange when a CPA is like, well, they're going to get that money eventually. And I'm like, if it's like a restaurant or an office building, it's like, 39 years from now. Like if you're in your 40s, it's like, I can't imagine having a huge income that I'm trying to write off when I'm like in my 80s. It's like, let's get rid of that now while I'm in my 30s, 40s, 50s, and then use that to grow my wealth. And then the ultimate trick is to die at the end. So then you don't have to pay back anything. And then you hand this all off to your kids. And then your kids don't have to pay it back. And now they've got new property. And again, guess what? We get to cost seg that at the new appraised value. And so then they don't pay taxes on all the property they just got. And then now you have generational wealth and nobody's paying taxes. And that about wraps it up. All right.
Sorry, I was on mute. Thank you so much, Tyler. Now, I did put your information in the chat. If you want to check to make sure, right? I did mess up on your email at first, but I retyped it in the chat. So if you want to just make sure that your information is correct there. And before we move forward, typically, in the in-person meetings, these last a lot longer. We're like flying through this stuff. So it looks like we had a couple people join since we started. So since we're kind of a smaller group today, looks like we have Katrina and Michael. If you guys want to introduce yourselves and then just let us know what you focus on in real estate or multifamily, or if you don't have experience, what your goals are in the multifamily space. sorry to make you guys catch you guys off guard because this mastermind is more interactive, so we all kind of have a voice in this type of meeting that I host. So yeah, if you guys want to introduce yourself and let us know either what you focus on or what your experience is in multifamily or real estate.
Hey, Greg. Sorry about that. I didn't see the link, so I didn't join at the beginning. But I've been focusing on multifamily, and I'm looking at focusing on multifamily. So thanks.
You're welcome. And that was Katrina. Okay, and then it looks like Mike. I know you were asking if someone needed finance. So what do you do, Michael?
Yeah, so I've been a long time investor. I've been investing for well over 20 years now. I got 87 doors in Dallas and about 42,000 square feet of ground floor retail. And predominantly it's mixed use buildings. And haven't really been purchasing since about 2015. That's really kind of in the Dallas market where I'm originally from. Took a rather aggressive price turn to the upside, and the strategy I was going after really didn't make a ton of sense at that point. So I basically transitioned a lot of my business at that point to it's the capital side of the business. So now I help sponsors. It's secure capital. Have a large it's network from it's my time investing as well as at the time I've worked in investment banking and other such industries. It's right now we've got about 300 it's global capital partners between family offices, institutional capital firms, sovereign wealth funds, both here in the U.S. and Europe, the Middle East, and Asia. And so we're really looking to kind of like help sponsors source either equity or debt for their projects. Yeah, that's kind of what I do.
Awesome, appreciate that. I know earlier when we were doing the introductions, Julie, if she's still on, she actually was looking for capital or money. So Julie, you can probably connect with Michael. He definitely is just said that he helps with like capital in the finance era. So that might be a good connection.
Yeah.
Yes, I would definitely love to network with you and speak with you. I'm currently driving. So is there any way you can, I know, I'm writing, so it's not, I don't have a pen and paper on me. But is there any way you can get your contact information to Greg and I can get it from him later on today or tomorrow?
Yeah, that's fine. I'll drop it in the general chat as well, but I'll also send it to Greg directly. And
okay, I would really appreciate it.
Yep, absolutely, not a problem.
Drive safe. All righty, let's see. So the next part of the, I guess, information that I had is again Tom is he probably did see this when you showed up to the in-person meeting. So I just kind of used some of the same slides from last month's in-person meeting. So it may be a refresher for you, Tom. But anyway, so I put this together for people, again, if you are new or not sure how to locate deals. I use some of these methods, not all myself, but I know people who cumulatively used all of these different methods together. So if you want to search for deals and find multifamily deals, I will say the number one source, at least for me, that helped when just getting a good deal flow are through brokers. They pretty much have all the off-market deals, and if you develop a good relationship with them, they will send you their hot leads or pocket listings before they actually post those leads. Sometimes they don't even make it to market because they have such a good relationship with you. So I'll say brokers is number one, developing a relationship with brokers. And methods I've used is I would go to like loopnet.com, for example. Now in the real estate space, there's a saying that says LoopNet is where deals go to die, right? But you go to LoopNet and then you can find brokers on LoopNet. And what you're gonna do is not necessarily look at their properties on LoopNet, because again, a lot of them they've been through multiple screenings and no one wanted them. So these are a lot of times bad deals. You can still find good deals on there. Wait, let me see, give me one moment. Let me mute everyone really fast. Okay, I think I got everybody muted. Okay, sorry about that. But yeah, so you go to LoopNet, you can find a broker on LoopNet, and then you can actually click on their links to go to their actual website and see if they actually have other listings on there that's not on LoopNet, get their information, obviously develop a relationship with them that way. Also, I've networked with brokers in person at just different real estate meetups and got their information, took them out to sushi, developed in-person relationship with some of these brokers, sent them thank you cards after, you know, they met me for food. Just with a personalized, like handwritten thank you card, because no one does that anymore. And it's like, wow, somebody actually took time to write an actual card. So I've done that with brokers, and they've sent me off-market deals. I've done direct mail. That's actually, I did some small multifamily wholesaling through direct mail, and actually even with getting a hold of owners of 80 to 100 units actually called me back like, hey, I got your information. There was a lot of back and forth with those. Now, I didn't get any of those deals, but actually I did get some momentum from that. I did try Facebook campaigns. I didn't have much success with that, but again, I was very green at that. I was just testing it out myself. But if you know what you're doing, or maybe get someone that does Facebook ads, they can probably set it up for you to where you get more traffic. But I did do that. I did get a couple of leads from there, so I did get some traction. I get really good success with pulling apartment owners' information. So I use a software called PropStream. I mean, there's many out there. So what I do is I pull a list, I have it skip traced by one of my offshore people that I use. And then once I get that skip trace, I get beyond the LLC to get the owner's name, address, email address, and then I actually have an outbound cold caller guy that I send the list to. He calls the people, then I follow up with the warm lead. So that's a method that I use, and it's been working pretty well for me to get off-market properties, and then you can drive for dollars as well. Now, I haven't personally driven for dollars, but I know people who have driven for dollars, and they did get some leads that way. But these are just some methods that I personally use, and a couple of people I know use these methods to get some, to start sourcing for deals and getting deal flow. So if you guys want to use these, go ahead. Just wanted to throw that out there. Anyone have any questions about any of these methods before we move on? No? I think everyone can unmute themselves, but okay, great. Alrighty there. Okay, so this section, I kind of actually took this from the ASREA. Let's see. Okay, yeah, I took this from ASREA. So pretty much this is called haves and wants, to where we can go around. Again, we have a small group today, so I mean, things are going pretty quickly. Typically, I'm used to having 20, 25 people in a room, so it takes the full 2-3 hours that I scheduled it for. But haves and wants is where if you pretty much have something, or if you want something, this is the time to actually speak it to the group. So for example, if you have, let's say, I don't know, property for sale, you will say, hey, well, I have a property for sale. Or if you want something like, hey, I'm looking for, money, or I'm looking for XYZ, or whatever it is that you're looking for, you want something, you can voice it here, and then possibly you may connect with somebody that's on the call that has what you want or want what you have, or vice versa. So we can open this up if you guys want to unmute yourselves. And does anybody have anything, or does anybody want anything, again, specifically related to multifamily investing? Kind of just pair people up already, where Julie with Michael, she was looking for money. He helps people with money, so that was a good haves and want. Does anybody else have or want anything that would like to discuss during this part, possibly build some connections?
I guess I have a couple wants. I don't have any haves, but I'm looking hopefully to get some financing, because I am self-employed, so I can't get financing through the bank. And I'm hoping to use something similar to an FHA loan. So I'm hoping to find a 3 or a 4-plex. So those are my 2 wants.
Okay.
Where are you, Tom?
I'm in Phoenix, Scottsdale.
Yeah. We have several clients who are developing multifamilies in the Valley, in Greater Phoenix, and with one likely exception, they're all going to be for sale in some form or another, from 35 units to 50-ish, somewhere in that range. So if anybody's looking to get in at that kind of level, there's lots out there.
Okay.
That's all new build.
Okay.
So I'd like to, I don't know who, I'm sorry, I didn't get your name, the one that just said your clients that are building. I would like to have your contact information as well. So in the future, I can connect with you also and possibly purchase some.
Okay. Yeah, I'll see if I can yeah, I think everybody at register, I think I should have everyone's name and email. And if you're okay, I can send an email to everyone so everyone is on that email, and then people can connect with each other that way. If you don't want it, just let me know, or you send me a private message or an email, but I can pretty much gather everyone who's showed today and then send it out so everybody has each other's information. At least an email, then you go from there and get each other's numbers and sit down and have coffee or something.
Sure.
Okay. Good. Thanks, Tom. Does anybody else have any haves or wants that they would like to discuss to the group and possibly connect with somebody? No? Okay.
Well, yeah. I guess I can go quick. I have like it's networks in a lot of it's a lot of cities around the country. So if you are looking at a city and potentially just want some information on it, just feel free to reach out. I probably know somebody there, and I'm more than happy to make the intro.
Thanks, Michael. Appreciate it. I'm gonna definitely connect with you after the call. Appreciate that. All right, anyone else? Okay, I think you're kind of, all right. So next is, these are just some recommendations that I personally like, as far as if you would like to learn more about multifamily or just keep up to date with what's happening. So these are just some different like YouTube channels that I personally like to follow and watch. So Commercial Property Advisors is one of them. Actually, it's one of my personal mentors that does a lot of the videos on that one. Bigger Pockets, a lot of us know Bigger Pockets. You go there or their forum and connect with people that way. I've met plenty of people on Bigger Pockets. You can create an account for free. Now they do have obviously the paid version. You don't even have to do that. You just create an account and then you can connect to people right away. I've met many people for free just with having an account on Bigger Pockets. Apartment building investing with Michael Blanc. He's actually a resident of Arizona, so he lives here. He's connected with some of my personal mentors as well that I work with. So he has really good podcasts on YouTube. The Real Estate Guys radio show, a lot of you guys know them. They've been around for a while, and they've interviewed many of the big names in real estate and multifamily investing. Obviously, Tim McElroy, he's also a local native here. Well, also native, but he lives here. He's one of the Rich Dad advisors to Robert Kiyosaki. If you guys know who Robert Kiyosaki is, he's part of that Rich Dad advisory team, and he lives here in Arizona as well, along as with Robert Kiyosaki. Vinny Chopra, he has a really good book as well and a good YouTube channel that he just started not too long ago, but he's a big-time multifamily syndicator and investor as well. And then Multifamily Investor Nation is Dan Hanford. I actually co-host. He has a multifamily group here that's nationwide. So I co-host his meeting in Phoenix with another real estate investor. Obviously, we haven't been doing these since the COVID stuff, but I don't know when those are going to pick back up. But he has a really good YouTube channel to where he actually doesn't have any type of mentoring program because he doesn't have time for that. But everything he puts on his channels are free. A lot of people, what I've seen that he puts out for free, other people actually charge for like their mentoring programs. And he has it for free on his YouTube channel. So if you go to Multifamily Investor Nation, you get lots of, he has one episode where his underwriter goes through like an entire underwriting step by step on like what to look for. These are numbers we use, how we underwrite, and they're literally doing an underwriting for free on the website. So I highly recommend checking that out. And yeah, I mean, that's pretty much it. I mean, today was a pretty quick meeting, guys. Yeah.
Yeah. Sorry. What was Bigger Pockets again?
Yeah, Bigger Pockets is a well, they have a podcast on YouTube, and also it's a real estate forum. So if you go to biggerpockets.com, they have pretty much anything you're interested in real estate. So they have resources, they have forums. So like, for example, let's say if you have a question on multifamily or construction, you can go see if it's already like a category in their forum and go there to read people's questions and answers, or if not, you will just post your own question, and then people who are investors, they will all chime in to just help you out because people want to give back. And again, it's pretty much free to create an account, but you just go to their website, create an account, and then you can start interacting with real estate investors in many different areas of real estate. But that's pretty much what Bigger Pockets is. And they interview people on their YouTube channel that's in real estate and that's successful and all that stuff. But they've been around for many years.
Thank you.
Think of it like Facebook, but only for real estate.
You say Facebook?
Facebook. It's literally Facebook, but it's just people for real. It's like a social media. They have an app too. I use the app on myself.
Yeah,
it's just it's like Facebook, Twitter, but it's basically only people involved in commercial real estate.
Yeah, I mean they're every part. Well,
yeah, they also do Burr Method. Big on Burr Method and
Burr Method and everything.
Yeah.
But yeah, these are some. I mean, there's so many channels out there, but these are just a few that I listen to constantly, almost like every day. But that's pretty much it, guys. I mean, again, typically we last for like 2 more hours in person, but today's a small, intimate group, and it kind of went quick. Appreciate you guys showing up. But again, if you want to connect with me, you can just send me an email when you receive the confirmation through Zoom. It had my email address that you can reply to, or just go to zeninvestments.com. If you want to connect to the Multifamily Mastermind Facebook group, to where we just post a lot of updates regarding multifamily, different trends, news that's happening that gets posted in the Facebook group. Or if you have questions, you can post those or things like that. You could do that in the Multifamily Mastermind group. So you just go to facebook.com/groups/Multifamily Mastermind Alliance. And then you can join the multifamily Facebook group and connect to other investors that way and build some relationships and networks that way. But I mean, that's pretty much it, guys. Again, thank you everyone for showing up. If you guys have any questions, connect with me. And if you need me to connect you to anybody else, I have a big network myself of many different people in real estate. So yeah, but that's pretty much it. Unless you guys have any other questions, wait, does somebody check in? We can definitely end the call. But I appreciate everyone coming, and yeah, thank you.
Gregory, yeah.
Thanks, Greg.
I actually do have one more question. Since I was late, I didn't quite get to hear what everybody else is interested in investing. I'm just kind of curious if people don't mind saying that it's one more time.
Okay, yeah. So pretty much right now, as far as in the multifamily space, I'm focused on more like of the syndication. I have a couple of business partners in California, and I'm helping source deals for them, looking for 80+ units here in the Phoenix area, but also I have a smaller group of investors that I'm looking to personally invest with, just getting some of our own deals of 10, 20, 30 units, somewhere in that range. But that's pretty much what I'm focused on right now. I mean, I have single family, wholesaling, mortgage note investing experience, but right now that's where my focus is, on the multifamily. But that's where I'm at.
I'm an architect who specializes in multifamily in Canada, Britain, US.
Awesome.
And Michael, I specialize in buy and holds. I have 6 rental units currently, and I'm trying to transition into larger multifamily.
Okay.
Hi, Michael. This is Katrina. I'm interested in multifamily. And Bruce, where are you located?
Peoria, North Phoenix.
Oh, okay. All right, great.
But I can work anywhere.
Good. Nice to meet both of you.
Yeah.
All right, and is that it? I think that's it. Okay. Alrighty, guys. Well, we'll go ahead and end the call, but I'll send out an email so everyone can have each other's information, at least email addresses, then you can just connect with people that way and network, build your team, and possibly do some business together.
Super.
All right. Well, see you guys. Have a good rest of your night. Thanks for joining, and I'll talk to you guys soon.
Thanks, Greg.
Thanks, Greg.
No problem.
Bye-bye.
Bye-bye.